Hello, and welcome to this week's episode of Coinscrum Markets. I'm Nisa. Coming up, I'll be joined by Bitstamp's Miha, Head of Business Development, and Oliver von Landsberg-Sadi, CEO at BCB Group, to talk about their recent partnership and the current state of banking for crypto exchanges. CoinList Matthieu Duval is back for a roundup of the markets in this week's crypto RFQ. Teana's been speaking to Prabhakar Reddy, co-founder of prime brokerage platform FalconX, about their recent $17 million funding round. And Philip Gradwell from Chainalysis takes another look at how this week's on-chain activity may impact Bitcoin's next price move. First, a look at this week's blockchain industry news. Over 60% of BTC hasn't moved in over a year. The last time this happened was just before the 2017 run-up. Bloomberg put out an extremely bullish research report calling for $20K price this year. I listened to a call with Fidelity Digital Assets, who have just released a survey of its institutional clients. They said that a third of investors already have access to digital assets, up from 22% last year, and 80% are interested in adding them to their portfolio. Family offices have been investing part of their $6 trillion in assets in crypto. According to UBS, 57% of them believe blockchain will transform investing strategies and behaviors in the future. Coinbase is in talks with the IRS and the DEA about selling blockchain analytics. This, coupled with recent outages, prompted many in the community to close their accounts or raise serious privacy concerns. The value of DeFi tokens crossed the $2 billion threshold, while the value of the tokens locked within the services remains at $1 billion. Still impressive. Galaxy Digital and Bakkt unveil a joint trading and custody product for institutional investors based on demand. And finally, Jerome Powell, the Fed chairman, provided a statement regarding the suitability of Ameribor, which uses a permission version of Ethereum to capture interbank lending rates as a replacement to LIBOR. Big news. Next up is Crypto RFQ.
Thanks, Nisa. I'm joined today by Matt Duval, who's the head of financial products at CoinList. Hey, Matt, thanks for joining us.
Hi there. How are you doing?
I'm great. Thank you. So tell us, what's been happening in the crypto markets this past week?
So actually, just looking at Bitcoin, you might think that nothing's going on or just stuck under $10,000.
Yeah.
However, looking through the altcoin ladder, some really exciting things are happening, especially in the DeFi world. When you look at DeFi tokens such as Kyber, up 50% in the last 2 days, Loopring up 100% in the last 2 weeks.
Wow.
Maker up 100% as well since being launched on Coinbase a couple of weeks ago. 0x up 100% in the last month. So all these kind of ecosystem tokens are now picking up a lot of steam. Of course, the critics will say, hey, this is just a tiny bit compared to where they were in 2017. Yes, yeah. Sure. But really, it's kind of showing that the products are working. The platforms are getting more and more volume. So the traction is extremely exciting.
Okay. So I saw something interesting this week around WBTC. Tell us, what is that? What is a new creation?
For sure. It's actually 1 year old. It was created by a few people, BitGo, Kyber, and others who got together and thought that, well, BTC is amazing, but one of the really worst kept secret of crypto is that blockchains don't really communicate very well together. Mm-hmm. So WBTC is just the ERC20 representation of Bitcoin on the ETH blockchain. In layman terms, that means that you deposit one BTC and you receive one ERC20 token called WBTC, and now you can trade Bitcoin on the ETH blockchain. As I said, DeFi is super hot right now, so people are looking to put their Bitcoin to work by wrapping their Bitcoin, WBTC, and then putting it on Maker, on Compound, or trading it on 0x and other platforms.
Yeah, interesting. The DeFi community is always coming up with something weird and wonderful. So let's talk a little bit about price versus volume. So you mentioned Bitcoin's been pretty stable this week, but I have noticed a trend around the price seems to be rising not necessarily in correlation with the volume. So typically we see volume go up, price go up, but at the moment, volume seems to be on a downward trend and price does still seem to be climbing. Why do you think, what could be the indicator for why that's happened?
So intuitively, when I look at that stuff, I see, some equities that are going through the roof. Tesla, you have Hertz, big rally in Hertz that is in, chapter 11 currently. Mm-hmm. So you kind of feel like traders being super bored at home, sheltering in place, are kind of looking for things that are cheap and that go up and invest in that. Right now, it's Hertz. It's not Bitcoin. So I'm kind of thinking, hey, equity markets are having all the limelight at the moment. We're flat year to date. At the same time, we are on the verge of, or in the middle of, one of the largest recessions of the last 100 years. Yeah. How do you reconcile those two facts? Well, at some point, equities will reprice. We'll have a very severe repricing when people actually realize that, oh my God, Q2 and Q3 GDP are going to be in the negative double-digit performance. Yeah. I think when that happens, crypto will be kind of the time for it to shine. And a lot of volume and a lot of price action is going to go there because everything crashes. Where should I put my money? Yeah. So that's kind of, yeah.
How does the increase of derivatives trading impact the price versus volume that we see typically in the spot market? Does that have an impact?
Yeah, actually, very interestingly, when OKX, for example, decreased its allowed leverage from 50x, I think, to 8x, their volumes also decreased by an order of 10. So really, the derivative platform allowing you to get so much more leverage really prop up the volume by 1-to-1 nearly. So the fact that you have more platforms now allowing leverage, CME open interest that is at all-time highs, derivative options, all-time highs volumes and open interest, you kind of feel that the market is exciting, is looking for new instruments to get involved, and the rising tide lifts all boats here.
Yeah, great. Okay, so one last quick question. Last week I asked Patrick Poyser about some impact that the ECB stimulus package could potentially have on the crypto market. And this week, we've heard from the Fed that they're not exploring negative interest rates, but yet the ECB and the UK central banks have said that they'll consider it. What kind of impact do you think that this might have?
Yeah, so it's a very interesting question. It's probably very indirect impact. I would say in general that the kind of difference in interest rates should be bullish USD and bearish euro. You can see the USD stablecoin market has exploded this year. Tether is at nearly $10 billion of market cap. They started the year at 2 or 3. It's insane. So you're going to feel like the dollar being more attractive as an investment, just being the dollar, could actually bring even more publicity to the stable coins, because all of a sudden I can send USD to someone who's in Tokyo, who's in Ghana, which would have been extremely hard to do a year ago. So it's going to be super interesting to see how much more the USD stablecoin market can grow.
Great. Well, hopefully we'll have you back in a couple of weeks and we can see if anything happened. Thank you so much, Matt. It was great to have you.
Thank you. Absolutely.
Back to you, Nisa.
The demand for more sophisticated crypto brokerage and prime brokerage services has led to a wave of new funding in M&A deals this year. Teana speaks to FalconX co-founder Prabhakar Reddy about their recent $17 million seed funding round, their product, and their plans for the future.
Thanks, Nisa. I'm delighted to be joined today by Prabhakar Reddy from FalconX. Prabhakar, thank you so much for joining us today.
Good to be here. Thank you for having me, Teana.
And congratulations on your recent £17 million funding round. FalconX has been flying somewhat under the radar before the announcement of the raise, so congratulations. For those of us who might not be aware of who you are and what you do, tell us the FalconX story and what stage are you at in the company now?
Sure thing. So FalconX is a digital asset trading platform built ground up for institutional investors. We service some of the largest digital asset hedge funds, prop trading firms, OTC desks, payment gateways, and miners around the world. We exist primarily to deliver best-in-class pricing, which is very tight spreads with zero slippage, no hidden fees, primarily to institutional investors. Right? We launched, I would say, about over a year ago. primarily to scratch our own itch. And we are today one of the largest digital asset trading platforms in the world.
Yeah.
We're also very fortunate to be backed by some of the world's notable investors, such as Axel, Accomplice, Lightspeed, Coinbase, and Fidelity.
Great. Well, I think most great entrepreneurs end up trying to solve a problem that they experience themselves, right? So interesting that that's how your story started. So prime brokerage seems to be a really hot topic right now. Everybody wants to get into the prime brokerage space. Can you briefly explain to our viewers that might not be familiar with what exactly prime brokerage is? So, the finance community may understand, but the crypto community, this may be new. And what problem it solves for crypto?
Absolutely. So prime brokerage, in a very simple nutshell, is nothing but few core product lines bundled together to offer a one-stop shop, primarily towards institutional investors, right? Mm-hmm. In crypto, it consists of three primary pillars. One is trading, custody, and lending or margin, right? So various companies are approaching this from different starting points to build towards the same goal. We started this from a trading point of view.
Okay. But you'll still offer that same type of bundle to help the institutional, because I think institutional audiences have slightly different needs in that they're used to going to market in a different way than maybe retail investors are. Right. So retail investors may be used to going to different people to get different things, but institutions are used to kind of a one-stop shop approach.
Absolutely. Yeah, that's right. So they would like to basically consolidate their efforts because institutions trade, 100x more than what retail investors do almost on a daily basis.
Yeah.
So the needs are a lot more bespoke. And so just making sure that the latency needs are met, the slippage needs are met, and no hidden fees are charged to them is very important compared to what retail users have.
Indeed. Yeah. So in recent news, we've seen Coinbase acquire Tagomi. Genesis has acquired the custodian Vault and have announced their move into prime brokerage services, and BitGo as well into a vertical. So what's the specific USP or your edge that FalconX brings to the market against your competitors?
It's a very good question, Teana. So to understand our edge, you need to understand the difference between, say, an agency broker versus a principal desk. Right?
Okay.
So I'll explain perhaps with an example, right? So if Teana is looking to buy 10 BTC from an agency dealer, you get the price of, say, right now it's $9,745, right?
Yep.
And at the time, by the time you go to execute at that price, say the price in Gemini or Coinbase moves to $9,750, you actually end up paying that price. In addition to that, you're sometimes, charged the fees of Coinbase, Gemini, and other execution venues, as well as your own Tagomi or SFox's fees, right? So that creates a lot of complexity for institutional investors who actually want just one price at the time they're looking to execute. So if you come to a principal desk, right, and Teana comes to FalconX to buy 10 BTC, we give you a quote of $9,741. We guarantee that price for you for a defined period of time, right? So you only have to deal with FalconX. You don't have to worry about Coinbase's fees or price on Gemini and going somewhere else. No slippage, no hidden fees, one guaranteed price. So it's two different approaches, and ours clicked well with institutional investors, I'd say.
And I think that there's something about, unique around how you utilize AI on your platform. Can you tell me a little bit about that?
Yeah, so I'd say it's less AI and more machine learning and data science.
Okay.
Right? We are not yet at the AI level, but what we do to effectively give you that, guaranteed price for a defined period of time is synthesize large sets of data, right? We're in a market that's extremely volatile like crypto, while pulling liquidity from structured liquidity sources as well as unstructured liquidity pools, we actually need to give you that defined time guarantee. So that is how we use machine learning.
Excellent. Okay. So prime brokerage can be quite balance sheet intensive. So how does a new to the market player like FalconX compete with the likes of a Coinbase, for example, that might have a deeper balance sheet?
Yeah, that's a very good question. And that keeps us up, almost every day in terms of how to build a large balance sheet. But, if you look at it, Fidelity was not built in a day. And neither was Coinbase, right?
Indeed.
So we have a methodical plan of action to build towards our goals. And I'd like to point out two things, right? One, they're very fortunate to have the backing of some of the largest funds in fintech, right? And two, you combine that with our ability to monetize very early Actually, it has allowed us to scale very rapidly. I think we are on a very good track or trajectory to get there, actually.
Great. Okay. So we've been hearing in the industry, and we've been saying in the industry for, probably 24 months, a couple of years now, that the institutions are coming. The institutions are coming, right? And who are these institutions? Are the banks? Are they asset managers? Who are the institutions? But that story's been kind of playing in the background for some time in crypto. Do you sense that services like yours, and I think specifically things like prime brokerage that are really kind of tailored around that same institutional experience, will help those institutions come? Are we starting to now tick those boxes for those types of investors and entities to get into the space?
Yeah, I mean, we've all heard that narrative since perhaps late 2017, early 2018, right? So when we entered the market, there were lots of inefficiencies, and they were quite glaringly visible. But I think, ever since FalconX has entered the space, we've actually seen quite a difference that we ourselves have made in the space. Okay. For example, right, like if you look at spreads on OTC for institutional investors, about a year ago, they were 10x of what they are today, right? That made it very difficult for a sophisticated institutional trader to see the industry as a mature market, right? We still have a long way to go, but I think our ability to provide a guaranteed price, in addition to filtering out all this bad market data that exists in this space, provides, I think, a level of trust and transparency that these experienced institutions that are looking to come into the space need.
So how do you identify what assets are going to be the most important to your clients? How do you focus in on what that product proposition is? What are the institutions interested in?
So if you look at what majority of our institutional clientele have been trading, is primarily BTC, ETH, and mostly stable coins. Okay, right?
So top of the league table.
Yeah, so we offer primarily the top 5 in stable coins. But as the market expands, we'll have to see, because the market needs liquidity and depth in order to be able to cater to institutions. A lot of the other coins don't. So it's primarily concentrated, head heavy around BTC and ETH right now.
Okay. So I'm going to put you in the hot seat a little bit. Sure. You are coming to market in a really chaotic and interesting time from an economic perspective and monetary policy, and COVID-19 has really caused havoc on global economies. So what do you see the next 12 months looking like for FalconX, for the market overall, and how do you guys fit into that? Where's the opportunity? Where's the challenge?
Yeah, that's a very good question. So our core business is spot, crypto trading. And from our own product point of view, we're actually rolling out several new product enhancements that we'll be announcing soon. So keep an eye out for that.
Okay.
But we plan to primarily enable new use cases, right, that build on FalconX's deep liquidity as well as trading infrastructure, like cross-border B2B payments. That's something that we're excited to venture into. But from an overall industry perspective, you're right. We are, in a very interesting economic environment. Investors around the world are starting to look for protection against what I would say inevitable, monetary inflation, right? So big players like Paul Tudor Jones, Rentec are starting to, dip their toes into the space as a hedge against, the macro conditions. So you combine that with significantly better infrastructure, smarter people in the ecosystem, a lot more use cases that are being worked on. I'm quite bullish about the space and what's to come in next year.
Well, you've just raised 17 million pounds, so somebody feels pretty confident that you're onto the right track anyway. Prabha, it's been wonderful to have you with us. Thank you so much for your time, and I wish you loads of luck with the launch.
Thank you so much. Really appreciate it, Teana.
Take care. Back to you, Nisa.
Bye.
Thanks, Teana. The history of challenges facing crypto exchanges in accessing banking services is as old as the industry itself. With JP Morgan recently opening up services to certain operators in the US, there are signs that things are starting to improve, not only there, but also globally. This week, I was joined by Bitstamp's Miha Oliver and BCB Group's Oliver von Landsberg-Sadi to discuss their partnership, which has finally opened up a sterling on-ramp to one of the world's oldest crypto exchanges. I am joined by Bitstamp's Miha Oliver, Head of Business Development, and Oliver von Landsberg-Sadi, CEO at BCB Group. Welcome to you both.
Thank you very much, Nisa. It's great to be here.
Thank you.
You recently announced a partnership for providing exchange deposits and withdrawals in GBP. How did that come to be?
Want to take that one?
Yeah, it's been a pretty long road. I think first, the broader context is that banking in crypto has been a pain in the neck since day one. And the conversation between myself and Oliver, and then both of our companies, started well over a year ago. But as things stand, things take time. So I think we're both pretty excited to finally get this one off the ground.
Oliver?
Indeed. I think my story probably begins in 2017 when I was just trying to get some GBP deposits into Bitstamp, and the only way you could get there is via Euro and USD. And this is for our brokerage side of the business. So it's nice to have traced the story to this point where we're actually providing that wholesale, for their complete corporate and personal client base. It's been a long journey in the making, but we're excited that we're live now.
Anyone in the industry knows how difficult gaining and maintaining banking relationships has been. How have these issues evolved and been resolved for Bitstamp over the years?
Well, banking being an issue is an understatement in itself. It was extremely hard to get banking, especially in the early days when Bitcoin itself was viewed in a very antagonistic fashion by the banks. But I must say that over the years, as the industry grew and became more mature, the easier it got. And now I think with a lot of institutional interest as well as more mature regulatory environments, banking is becoming easier. Now, when I say easier, this needs to be viewed from a longer time period. It is still not simple, not by far not simple, but it is day and night compared to, let's say, early 2014, 15.
Quite right. Yes, there's a constant pressure from the mainstream established banks who are not fans of this industry. There's a growing thread of banks who recognize the opportunities here and who understand that the risks perceived by the larger banks are actually manageable and in some cases more manageable, because in this crypto space we've got high traceability of the underlying assets, which you just don't have in analog markets.
Bitstamp was early on involved in regulation. Has that impacted volume or customers?
I wouldn't necessarily say that it impacted volumes or customers. I would say that it impacted the way we are being perceived by the industry, as well as the banking partners or more mature new entrants to this space. That's for sure. It certainly helped establishing banking rails. And today, I think Bitstamp is one of the best banked exchanges in the space. But that still does not mean that you win business simply by being regulated. We are competing against regulated as well as unregulated businesses and products. Ease of use, user friendliness, good service, and also reliability and stability is what gets you reputation and business ultimately.
Oliver, what have the challenges specifically for GBP processing versus USD, Euro, etc. been?
So GBP is a special beast because the expectation among people sending and receiving GBP is that it's instant. People are used to paying their friends and their friend receiving the money instantly, which is not really the case for Euro and USD. So in an environment where we're trying to control risks, we have to provide that real-time service while at the same time being able to analyze and monitor those transactions. When you're processing dollar and euro, there is a small lag which buys you time to understand, is this transaction legit? You can put it through your ops teams or some kind of AI-based automation to understand those risks. But the biggest challenge in enabling GBP is making sure that you're still processing all of those transactions safely at scale while maintaining that kind of real-time component.
And in second to that, looking from the exchange and coming from the exchange perspective, every currency has their own little domestic particular system that it's backed by. So in for euros, you have SEPA. For GBP, you have the UK banking system, which is completely unique. Then you have domestic US transfers and banking system, which is a world in its own. And then you have the huge international wire system of intermediary banks, which is another layer of complexity. So sending money back and forth is really a complex undertaking, which the customers ultimately don't really see on a day-to-day.
We recently saw announcements that other US exchanges have partnered with large US banks. How do you think things are changing now? And where are the boundaries between regulators and commercial banks?
I can take this one, Oliver. So these types of conversations don't just happen overnight. So if it's in the news today, this is probably a result of a very long conversation and a really long due diligence process from both sides, especially the banks. If you look from the banking perspective, huge institutions, they move slowly. And a move like this does signal change to the industry. And I can say that this does also spark additional interest and ease and pave the way for other exchanges to get banked by other tier 1 banks. Now, how regulatory and banking are proxies for enforcement of regulations, I think that used to be the case in the early days, where the banks were reluctant to take on crypto exchanges because they were worried about their banking licenses being taken away by the regulatory bodies. So in a way, exchanges were regulated through banks acting like a proxy for the regulators. Now, I think this is changing because exchanges, for example, themselves are regulated financial institutions. So there is a much higher level of trust and transparency in the space, and also more maturity, which definitely helps.
Yeah, I want to echo that and say one of the main outputs of what Miha is talking about is that these banking channels become wider. More money is able to flow because regulatory oversight is greater, and those institutions and exchanges like Bitstamp, who are really leading the way here from a regulatory point of view, recognize that the only way to get those channels super wide, to get money flowing efficiently and without friction, is to be friendly with the banks and the regulators, not to be opposed to them.
So what's next for both of you?
Oh, this is an exciting one for us. And Miha, if I may take the liberty of announcing a one of a kind. So Bitstamp and BCB will be launching a payments network called Blink. Blink is a network that enables BCB counterparties to settle with each other real time 24/7 across multiple currencies. This is something that we hope will unblock those slower USD and Euro, especially the Euro and non-GBP currencies, unlock those potentials so that those clients can settle 24/7 and really take advantage of those market opportunities on Bitstamp.
That's exciting.
Yes. And for Bitstamp, we're just in the process of launching additional trading pairs. So we've listed GBP pairs last week with the support and help from Oliver and BCB. Just today, we're launching our PAX pairs, and shortly we'll be also introducing Stellar Lumens, as well as other cryptocurrencies later in the year. And to enable liquidity and money to flow through, initiatives like Blink are going to be one of the central focal points of development for us as well.
Well, we're looking forward to that. Thank you both so much for being here today.
Thanks, Nisa.
Next up, Philip's back with his review of this week's on-chain data in this week's on-chain reaction.
Thanks, Nisa, and welcome to On-Chain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, here to take you through what's been going on the blockchain. To start with some context, the Bitcoin price, it's had a sideways week. Daily close prices have been between 9,600 and 9,800 in the last 7 days. That's coming off a spike up to 10,000, which quickly fell below 9.5, which we talked about last week. In fact, we can see that the inflows of Bitcoin to exchanges, they are actually at lowest levels we've seen for 6 months. There was that big spike of 125,000 Bitcoin coming into exchanges, but that was when the prices rose above 10,000. This week, as prices have been below, inflows have been low. In terms of changes of Bitcoin on the balance of exchanges, that is, the inflows minus the outflows, well, they look like they are increasing. There is this potential big decrease in net balances very recently on the 8th. That, however, is unlikely to be a large withdrawal from exchanges. It's actually linked to Coinbase. There's been some controversy recently around them, which may have led some people to take their Bitcoin off. But it's not clear that Bitcoin has actually reached other services yet. In fact, when we look at it more on chain, we see it's likely Bitcoin that's being held in a hot wallet, also known as a peer chain, ready for people to actually make their withdrawals. So it looks like that Bitcoin is still actually controlled by Coinbase. That's why it's in that blue shaded area where we have seen there's been a movement out of main wallets, but we can't yet confirm whether there's been a change of hands. If we look at the flows between exchanges, well, it's down across the board. And that's in line with the overall decrease in flows we talked about earlier. It's been a quiet week. For me, there is a particularly interesting insight, though, which is in derivatives exchanges, there's actually been a net outflow of Bitcoin from those exchanges. At the same time, there's actually been an increase in open interest. So that's the total value of all the derivatives positions that are open. And when you get an increase in open interest, but a decrease in the amount of Bitcoin on those platforms, it suggests that people are increasing their leverage because there's less of the underlying asset, but there are more bets being made about where the price of that underlying asset is going to go. So not a big effect this week, but certainly something that's interesting. It's not just Bitcoin that's seeing an increase in balance on exchanges. Tether as well is continuing a trend that we've now seen for a few weeks of building up those balances. It's not just limited to Bitcoin and Tether, though. Ethereum has actually seen an increase of Ether on exchange balances in recent weeks as the price has increased. So it looks like people have been sending their Ether to exchanges, ready to sell it, potentially if the price gets even higher. So overall, it's been a quiet week in crypto. We tend not to get many of those, so I hope you enjoyed that. And really, the outlook from last week persists. People have positioned their assets on exchanges to buy and to sell. So the Tether's there to buy, the Ether, the Bitcoin is there to sell, if the price were to move. However, the fact that those assets on the exchanges mean that the price move is likely to be dampened. If the price goes up above 10,000, people will start selling their Bitcoin, and that will bring the price down. So I do expect any future price changes to happen within a narrow band. And as we mentioned, there has been this decrease of assets on derivatives exchanges, but this increase in open interest, suggesting the market is getting a little bit more leveraged. Not the biggest story this week, but certainly one to watch in the future. Thanks, and back to you, Nisa.
Thanks, Philip. You've been watching Coinscrum Markets. See you again next week.